everyone, it's Saanvi Gullapalli.
Hi, I'm Arjun Mallavarapu.
And today we're doing a video about dividends. So Arjun, what's a dividend?
A dividend is a payment made by a corporation to its shareholders, typically in cash or additional shares of the stock. Dividends are paid out of companies' profits as a way to share its success with its investors. They are typically issued quarterly, annually, semi-annually, or on a certain schedule based on the company. Saanvi?
So let's explore the history of dividends. The first company to issue a dividend was the Dutch East India Company, established in 1602. This company was the first company to offer publicly traded shares and to also introduce the concept of dividends. Ever since then, dividends are very crucial in the stock market. It allows companies to share their profits with investors. The Dutch East India Company was listed on the Amsterdam Stock Exchange, which is the world's first official stock exchange. It is the first exchange to offer publicly traded shares and marked the beginning of modern trading. Arjun?
Why do companies pay dividends? Number one is to attract investors. Dividend-paying stocks are often seen as more stable and can attract income-focused investors such as retirees who seek regular income streams. Signal financial health. A steady dividend-paying amount can indicate that the company is financially healthy and generating consistent profits. Saanvi?
So, return value for shareholders. As I said before, dividends allow companies to give some of their profits to investors. It increases shareholder loyalty and satisfaction. Tax advantages. Some countries give dividend income a lower tax rate compared to other sources of income. This can be appealing to certain investors. So what are the advantages of dividend investing? Number one, steady income. Dividends provide a reliable source of income to investors. It's especially appealing to income-focused investors like retirees. Reinvesting opportunities. Dividends allow investors to reinvest back their dividend money back into the stock market to buy more shares. It can increase the compounding effect over time. Arjun?
Risk mitigation. Stocks with reliable dividend payouts are often seen as less volatile than non-dividend stocks because dividends provide a cushion for investors in case the stock price drops. Considerations for investors. Dividend yield versus stock price appreciation. While dividends provide income, a high yield also might indicate a higher risk. If a company pays a very high dividend relative to its stock price, it could be a sign of financial trouble. Saanvi?
Dividend cuts. If a company eliminates or reduces their dividend, that can be based on their financial ability. Now, if they do eliminate or reduce their dividend, it can cause a drop in the stock price that negatively affects investors. And tax implications. Now, dividends depending on where you live, dividend income can be charged at a higher or lower tax rate compared to other capital gains. So, before you invest in a company because of their dividend, you have to make sure to look at your tax strategy and make sure it doesn't have any implications. So, what are some of the highest paying dividend companies in S&P 500? Number 1, Pfizer. Number 2, Johnson & Johnson. Number 3, Procter & Gamble. Number 4, Chevron. Number 5, ExxonMobil. Number 6, AT&T. So all of these companies are the highest paying dividend companies in S&P 500. That's it for today. Thanks for watching.
Bye.